I'm Georgia Williams with the Investing News Network. Joining me today is Howard Klein, co-founder and partner at RK Equity, a research and capital markets advisory firm focused on the lithium-ion battery materials supply chain. Thank you for joining me today, Howard.
Thanks for having me.
It's a pleasure. Last time we spoke in December, you had just released your white paper calling for the creation of a strategic lithium reserve that would essentially establish a price floor, preventing price volatility and incentivizing new production. Then in early February, the Trump administration announced its Project Vault plans. What were your initial thoughts of the announcement?
Project Vault got a lot of press when it was announced last week, but there were a few other announcements, and Marco Rubio organized a ministerial with 55 countries. So there was Project Forge and Pax Silica, et cetera. But the Project Vault was interesting, but that also followed on the legislative side the introduction of a bill called the Secure Minerals Act, which was bipartisan, Democrats and Republican, and bicameral, right, both the House and the Senate. And that was calling for a strategic resiliency reserve. So, yes, I called for a strategic lithium reserve in December, and then you had this secure legislation come out, and then like a week later, Project Vault came out. So Project Vault got a lot more press than Secure Minerals Act did, but I think they're complementary and they're different. And the Project Vault, firstly, they call it a stockpile, but it's for civilian uses. So it's a private sector, not a defense stockpile, because last year the administration, enacted or announced, I think, $2 billion of stockpiling for defense. So this is very much Project Vault. There's not a lot of details on Project Vault, so I'm just parsing through what I know and observe and what the administration has said. So it is for civilian use, and it is backed by the private sector, and combined with the Export-Import Bank in the U.S., which is essentially an export credit agency. And so Project Vault is the named participants so far were companies like GM, Stellantis, Boeing, I think Google. There was a battery company that for traditional car batteries, not electric vehicle batteries. And they, the Export-Import Bank is going to facilitate, project finance for certain materials. And there are 3 trading companies that were named that are going to help them source that material. So Hartree, Traxys, and Mercuria. So here you have private sector putting in $1.7 billion. And as far as I understand, they're going to submit their shopping list, right? What are their needs? And rather than buying those themselves, they're going to use the traders to help source that material for them. And they're going to use the project finance, so for working capital, the Export-Import Bank is going to, purchase the material, for them and then stockpile it. So in some vault somewhere that's GM's material, that's Boeing's material, that's, Google's material. We don't know which materials that they're going to use. Also, as far as what they're going to buy, there's still to be determined. So many details, still to be determined. But the other reporting that I saw about it is that this is kind of like a working capital. Ensuring availability with, let's say, a 30 to 60 day time frame. So in the event that, let's say, Ford last year panicked for their Ford Explorer because they weren't getting magnets. Within 7 days, they were going to shut down, the Ford Explorer. And that's what really, catalyzed this warp speed activity from the Trump administration, was that realization. So in the event of China or some other entity enacting an export control or some other policy which would thwart the production line of a given, Fortune 100 company, which is pretty much the backers of this Project Vault, they would have that availability if they had procured ahead of time, those magnets into the stockpile. So it is very different from the Strategic Lithium Reserve, which is a market structure idea. And it's different from what the Secure Minerals Act is conceiving, which is also a market structure. So Project Vault seems to be very much focused on Fortune 100 companies. And then the Export-Import Bank generally is lending to super high credit quality customers. So it's a good idea. It's a good step. It's complementary, but it's not solving the catastrophic lows in, let's say, lithium or cobalt or graphite, which prevents the long-term investments in up and mid and downstream investments across the sector. So it got a lot of press. It shows America is acting, combined with, the Forge, which is meant to be, a coordination exercise across a number of countries. These are good steps, but the reality is right now, a lot of the material that's going to go into Project Vault is going to be purchased from China because that's where these materials are processed. So it's a nice step. And a lot more steps are needed. So that was all of the news last week catalyzed my writing this note over the weekend, and I introduced it on Monday to just kind of like take stock of what's happening. And it's great. It's wonderful. Robert Friedland, was in the Oval Office shaking hands with Trump and making a statement. And Doug Burgum, the Interior Secretary, is saying "mine, baby, mine," on TV all week. And the Exim guy, John Jovanovic, I think his name is, also, talking about the importance of these initiatives. And Marco Rubio, likewise, and J.D. Vance, actually, in introducing the ministerial under Secretary Rubio, talked about price volatility as being a major, the major problem, thwarting the development of, up and midstream investments. And earlier this year, actually, I'll say another thing, the White House passed, executive orders from the White House and the Commerce Department that talked about processing as the choke point. And Trump talked about it as well at Davos, right? He said, there's no such thing as rare earth. There's rare processing. So there's a lot of talk and understanding about that. But the events of last week in Project Vault don't specifically target the price volatility angle too much. That's a market structure thing. It's not a, company specific thing. And they haven't really talked a ton about processing in particular, in the battery materials sector, which I think is critically important.
Absolutely. And you touched on this a little bit. So earlier this week, you released a response, which was entitled, "Which Critical Metals Matter Most?" which I think is a very pertinent question. And it touched on some of these legislations and processes and programs that are coming out. And I was wondering if you could touch a little bit on your findings that the paper was showcasing.
Well, thanks for that. Yeah, so there are 60 critical minerals on the critical minerals list. So how do you prioritize? In Project Vault, which minerals are going to be stockpiled, right? So I tried to do a first pass categorization of those 60 critical minerals, and they range, I put them into three buckets. There are large markets, relatively mature, like copper, aluminum, met coal, and others. Those have large liquid markets where you can sell forward, use risk management tools, hedge 5 years. And also, if you're a project finance banker, you could look at the history, a very long 100-year history of copper and feel comfortable, that it'll be volatile, but it won't be like lithium volatility, right? Like you can lend against something because it has a long track record history. It's a big liquid market. So that's one bucket of critical mineral that has its dynamic. And then you have on the flip side, tiny markets, right? Like scandium or samarium or germanium or gallium. And a number of those markets, are defense related. Sometimes it's one or two mines, right, that you have to contract with or subsidize in some way in order to get that material. And, so that's another bucket. So those require different tools for different buckets. And then there was this third bucket where lithium falls and a number of other materials fall. And when I categorize those other materials, they were battery materials and they were magnet materials, right? So it was NdPr, and DyTb, on the rare earth side. It was lithium. It was also importantly, like nickel is a big market, but nickel sulfate, right, is a different market, and critical for batteries and things like phosphate. There's fertilizer phosphate, but, battery phosphate, is a different market. So different markets require different tools but which are the most critical? And I did a search, right? Did another piece of, a publication or strategy that was announced earlier this year. So the U.S. National Defense Strategy, right? This is the document from the Defense Department that basically said, the future of war, what do we need to do? What do we need to prepare for? It didn't say anything about critical minerals in that, but it talked about drones and lots of high-tech military equipment. And if you look at all of the types of equipment that they want to, buy, build, and integrate into the military, I did a search on an AI, LLM. And I said, what critical minerals go into those things? And inevitably, it was kind of the mine to magnet chain, and it was the mine to battery chain, right? So there was some reporting I saw last year that basically said the average American soldier is carrying 25 pounds of batteries on his body, right? With night vision equipment and other materials. So, so military applications are critically important. As this is not just the U.S., and we'll see if Trump is going to increase from 1 trillion to 1.5 trillion the defense spending, but that's a meaningful increase. You're also having in Europe and other NATO members, increasing their spend from 2% to 5% of GDP. So there's big military applications across the West that are battery and magnet intensive. And then the future of AI, right? The age of electricity, data centers, and the build out of all of that. I mean, Elon Musk basically is merging SpaceX with XAI, and he's saying that we need to have data centers close to the sun, right? It's cool up there, but it's also close to the sun because there's not going to be enough energy and electricity on land, right? So that's a real, he says a lot of things, but the build out for data centers globally, winning the age of electricity requires battery tech, it's highly consumptive of raw materials, in particular battery materials and magnet materials. So in that third bucket is lithium. And my argument or the punchline of the overall paper is just like, okay, How do we prioritize? Prioritize the mine to magnet chain. We're doing that, right? There's been a whole of government approach to solve the rare earths problem and the magnet problem. There has not yet been a whole of government approach and recognition that the mine to battery chain needs to be rectified as well. And that's not just lithium, it's graphite, it's anodes, it's cathodes. So the government needs to do a lot more, in this regard. And, so the punchline is that lithium is like NdPr, right? It's the stabilizing the battery, the entire battery chain, right? A cathode producer would like to see stable lithium prices or much less volatile lithium price. So in order to catalyze investment in CAM and PCAM, if you stabilize lithium, it'll go a long way to helping that. So I came back like lithium, the dynamics of lithium are such, again, I don't know all the other markets super well. I don't know manganese well. I don't know graphite super well, but I do know lithium quite well. And the fact that lithium is reasonably large, very fast growing, but the materials are relatively storable. They're relatively standardized, especially when talking about lithium carbonate, technical grade and battery grade. I'm not suggesting we store hydroxide because it has a short shelf life. I'm not suggesting storing spodumene because you'd be storing a lot of waste. So, but lithium carbonate equivalent is relatively fungible, not completely, but there are people who know how to process it as well. So, and there's a reasonable diversity of supply. China doesn't control 90% of it. They control, 70% or 60% of the conversion of it. And here in America, we have Albemarle, we have Rio Tinto, where they actually do convert to lithium chemicals in America. You have Tesla converting now chemicals, for their own use. And you have South American partners in Chile and Argentina, that are a source of supply. So but it's not anywhere near copper, size and diversity. So I think and there are forwards markets in lithium, but you could only go out 1 year, right? 1.5 years. You can't go out 5 years like you can in copper. So I view lithium as like it's a young industry, but it's like a teen or a tween, right? It's still immature, highly volatile, highly reactive, unpredictable, but is maturing. And in a few years, my idea for the strategic lithium reserve is that it could be a tool that lasts, 10 or 15 years, and that's it, right? So similarly to the way the government invested in MP Materials and gave them a price floor, the price floor was only for 10 years. Doug Burgum last week at an event at CSIS kind of commented that the Strategic Petroleum Reserve, was put in place 50 years ago for, various reasons due to oil embargoes, et cetera. But now we really don't need the Strategic Petroleum Reserve because we have shale in the U.S., right? So if prices of oil go to $100, we could just tap into, unconventional resources in the U.S. So my view of lithium is that that's possible. There's so many resources, unconventional and conventional, in the U.S. as well as in Canada. If we build out conversion capacity, and all we need to do is stabilize long-term investment cycles, right? Albemarle, for example, had planned to put in 100,000 ton, Megaflex facility, and then they canceled that because, prices went to $10. They said if prices are $20 to $25, then a kilogram, then that would incentivize long-term supply. But you can't make 10-year investment if you have, prices go from 10 to 50 to 10. You know what I mean? So the idea of the Strategic Lithium Reserve is to stabilize prices for, to enable the industry to mature, and, come in and be a buyer if prices go super low. At the same time, we don't want prices to go super high. So if prices are above, let's say, $40 a kilogram, that wouldn't be good for PCAM and CAM producers. So in the event that you got those spikes, the Strategic Lithium Reserve could sell into those spikes, or just their presence, would be known by the market to be a neutralizing force. So the idea, and this is also similar, we did an interview with some people who, which will come out this week, who were behind or helped craft the legislation for the Secure Minerals Act, and they were alluding to the Strategic Resiliency Reserve as having a similar function to the Fed. So the Fed, if the dollar gets too weak or too strong against the yen or the euro, the Fed intervenes, right? It buys, it sells. So the Strategic Resiliency Reserve, of which the Strategic Lithium Reserve, I think, is the best first test case of that, would have an independent kind of company and board and actor that would be like the Fed. The Fed's independent. They come in, they come out if the dollar is too strong or weak, if lithium prices are too strong or weak. This is kind of like the Fed for lithium or the Fed for critical minerals.
And you had sort of mentioned, like rare earths gets all of this attention and lithium has, an equally important role, but is sort of, forgotten about when it comes to sort of this larger policy. Do you think that that's because China, often in the past has flexed its muscle with rare earths and the exports of them, and lithium is sort of more, a market where they control the processing capacity, but they aren't as quick to, limit export capacity?
Absolutely. China has weaponized rare earths. They have weaponized to some extent graphite. They have not weaponized lithium yet, but they could. The one thing they did suggest was that they won't allow the export of DLE technology from China. So that points to, where they're thinking. But China in rare earths has their own rare earths. They do control that supply chain more than they control the lithium supply chain. So China is short high quality lithium resources. They do have conversion capacity. So I think this plays into why there's been less attention on lithium. But we shouldn't, be complacent that we won't have a lithium problem from China weaponizing it at some point. China, there is some thought that China did, if they didn't weaponize it through export controls, but they did help crush the lithium price by building a lot of conversion capacity in China, but also turning on some of their low quality mines, low grade, low quality. So if you're with lepidolite mines, which are low grade, high waste, relatively high cost, but they did that they threw a lot of money at it. They, maybe, less regulation, environmental or otherwise, but they did that because they think of the entire supply chain. They want to dominate electric vehicle and batteries as industries of the future. And they view the upstream raw material business is not necessarily needing to be profitable because they're focused on profits of the downstream. And to the extent that they're focused on profits at all, which there haven't been a lot of profits in across the entire sector. Like in China, they're over-investing. So they have weaponized, they have influenced the lithium market, but they haven't weaponized it in the way of saying, we're going to take away your lithium so you can't actually build your batteries. But, they certainly could do that in the future, and they have manipulated rare earths prices many times over many years to enable their ability today to say, okay, no more magnets, right? So the price manipulation, I'm just thinking about this now, the measures that they took, against Japan in 2010 and other measures over the years to prevent rare earths mines getting up and running over the past 10 or 15 years has put them in the position that they are today to weaponize. And lithium is going in that same trajectory if we don't have policies to address it.
Right. And you touched on this a little bit. Rare earth processing is like China accounts for 90+%. Lithium, it's less. But, a lot of the legislation initiatives that have been announced over this past month, I feel fail to address that sort of midstream market. How do you feel about the initiatives, and do they do enough to sort of meet that processing refinement middle ground?
They don't do enough. The batteries survived the one big beautiful bill, otherwise, cuts to, battery, renewable EV tech, but not for like a long time. I mean, I think it sunsets in a couple of years. So that's batteries, right? And then in terms of cathode and other measures, I think I'm not an expert on this, but I understand this week there was on graphite and graphite anode some progress, which basically said, they're going to keep high tariffs on graphite, so protecting, I guess, graphite, pure graphite and graphite anode producers. However, if you buy batteries, and battery packs that already have, Chinese, anodes in there, that's not going to be super high tariffed, right? So it's still incentivizing existing, purchasers of graphite anodes to buy the full product from China rather than, so it doesn't look like it's done enough to protect graphite and graphite anode production in North America. I'm not an expert on graphite, and that was just a headline that I read this morning. But so there's still a lot. There's more to be done here, and it's not just the fact that China didn't weaponize lithium yet. There still is a perception that lithium is tied to electric vehicles and lithium is tied to solar and wind. And the Trump administration is anti-electric vehicles.
Is there enough investment and attention on the midstream? And where would you like to see more capital deployed in that area?
There's not enough attention being paid to the midstream, but there's also not enough attention being paid, I think, overall to batteries. And I think that's going to change. But, batteries were preserved a little bit in the one big beautiful bill, whereas the EV tax credit went away. But it sunsets, in a few years. So there's some recognition of what I said earlier, that all of these applications need batteries, but the administration has been anti-EV. They're like lithium is correlated to, or in their minds, it's correlated to electric vehicles and renewable energy. That's changing, because batteries are relevant for infrastructure, grid infrastructure, and the military, et cetera. But they've been much more focused on coal and nuclear and other means, and not yet batteries. So I think that drives it. There needs to be a better understanding that batteries are critical infrastructure for the military and for winning the AI race. And once they see that, then they'll look at all of the components of battery, including the midstream, that need to be supported. But that was not the focus this time last year as they were trying to get their one big beautiful bill passed and, rip up a fair bit of what, Biden's IRA had in place. So they're not doing enough to focus on the midstream. And as I may have mentioned, I'm not a graphite expert, but I did see that there was some policy approved or not approved with relation to graphite and graphite anodes, which kept graphite, tariffs high, but also enabled purchasers of batteries that have Chinese-made graphite, anodes in them. Those tariffs are low, right? So it was a mixed bag as far as I understand it in terms of policy support for that midstream sector. So a lot more needs to be done, and I'm hopeful. I saw Trump tweeting positively about a phone call with Xi Jinping, overnight, that some sort of grand bargain, might be in store, and maybe, he has talked in the past about welcoming Chinese investment into America. I would hope to, that certainly on the processing side and on, the midstream side, there should be far less sensitivity than like on the electric vehicle side, about having Chinese companies come into America and help us scale this business. I mean, they have a comparative advantage now because they have built these industries so much. I mean, there's some argument in the US that we need to invest in new technology to leapfrog China. There's some argument, to that, but a lot of what China has done has just been very effectively scaling existing technology, and we just haven't scaled it sufficiently because, we haven't prioritized it enough. So I think there's scope to have, just like Trump is saying, hey, come to America. You have low tariffs if you invest, $500 billion, $1 trillion into America. Why not have more of the best Chinese companies investing into the United States in the midstream, in the upstream processing, so long as the material stays here, right?
Right.
It's not then just re-exported to China to support their industry.
Right. Yeah. And I think, it's sort of a no-brainer because he very much wants to reinvigorate manufacturing in America. And, that midstream could sort of serve as that for the mining sector. But, at Benchmark last year, Joe Lowry was talking about the need for the expertise. So do you, like a little bit of what you were talking about, this collaboration with China, do you see sort of that, shared brain power or, using Chinese expertise to help build this mainstream as, a viable option?
I think absolutely. I mean, that's what kind of China did when we had joint ventures in China, right? They took our expertise. I think Doug Burgum again said that we graduate like 250 geological engineers or metallurgists, and we graduate 30,000 lawyers, right? There's some disconnect there. We don't have enough skills, like young people. And I think there's all this talk about AI displacing a lot of industries, but AI will not be able to, grow as fast if you don't have more raw materials. And Elon Musk suggested that his humanoid robots may one day be mining rare earths, right, in the US. But I think that's far away. We do need to mine rare earths. MP Materials has employed a lot of new people and are building new skills in America. And those are good, high paying jobs, right? So a lot of white collar work are being displaced by LLMs and other AI. I read a piece this week, that if most of your work is done in reading and writing and analyzing, it's word based, right? A lot of that is going away, but physical, intelligent moving rock, AI, until humanoid robots are in place, you're going to need you may have electric dump trucks, right? And those are being utilized in the mining industry, but there are highly sophisticated people still working in the mining industry and processing industry. These are sophisticated industries. They're high paying jobs, and there's a huge undersupply of them. And so it's good to hear the administration recognizing this skills shortage problem as well. And the fact that the government, I've just never seen it. Again, Robert Friedland in the Oval Office, I've been doing RK Equity, for 23 years. And there's just been a giant headwind in the face of the mining industry the entire time. So to actually see the bully pulpit, just in the same way that Biden supported electric vehicles and clean energy, and then mining companies ended up, being considered clean energy investments and putting into clean energy ETFs, you're seeing a similar dynamic take place with the bully pulpit being used to promote the mining and the processing sector. And there's a recognition that we were asleep at the switch for 20, 25 years, and that it's not solvable in 1 to 2 years. But, with 5 to 10 year view, it is solvable. And with the whole of government and the weight, if the government's promoting it, then companies will follow. It's being reflected in valuations in the stock market. Companies are able to raise more capital now, in part because of it. But getting to the skills point of view, I think more people, if they see it on TV and they hear about it and people are promoting it, right? Who wants to go into an industry that for 20 years, basically all you heard was negative? Right? Like what graduate going to say, I'm going to go into mining industry? Are you crazy? That's like, you're going to go to Apple, Google, Amazon, the digital economy, right? But if you suddenly see, oh, wow, well, everyone was taught to code 5 years ago, and now, coding can be done, with AI. So I think you will start seeing us close that gap. And with respect to lithium, we actually were the world leader, and we still, Albemarle's still the biggest lithium company in the world. And we do have skills in lithium. We know how to mine it. We know how to process it. And, whereas in rare earths, we're building that from scratch. And in many other industries, we're building it from scratch. So we have the ability, but if we can import some, or if we could have Chinese set up joint ventures, like why couldn't Ganfeng help, a lithium company build a hydroxide or carbonate facility, and help train, our workers so that, with their, the expertise and the efficiencies that they have scaled over the last couple of years.
Absolutely. And, I just anecdotally, I'm wondering if like when you're at dinner parties, are you finding that, the general public are a little bit more open to the idea of mining? Because it does feel like over the last 5 years, especially, mining has sort of taken center stage, and not in a negative way, but just in the things that you need and you want need to be mined.
So I don't go to that many dinner parties. But I did go to a black tie wedding of a friend of mine relatively recently, and I caught up with some college friends. And what I've been doing for 23 years, they're regular lawyers or bankers and live in, so for much of the time I've been doing this, they really didn't have much of an idea. But for a couple of years, when everyone, Biden and team, were promoting electric vehicles, right? It became okay to, lithium to electric vehicles. I get it. Now, that's waned a bit. There was where I'm from New York, so it's a blue state, and people were supportive of Elon and his, sustainability vision, years ago. And over time, they've soured on him, on a personal basis for a number of reasons. So the The positive Tesla view has turned to like a negative Tesla view. But the to answer your question, the critical minerals angle, yes, it's in the press all of the time. It's still, I'm absorbing it every day and reading these tea leaves, but it's still not well understood by a lot of people. I say, like, what is critical minerals? There's still some very basic questions being asked. And yeah, so I think we have a ways to go, but this administration is heavily promoting it and will continue to promote it. And it's not just us. It's, those rare earths weaponization in October would have impacted all of our allies as well. So that's why you're seeing this coordinated approach, this ministerial of 55 countries that Rubio organized. We'll see how it plays out. I mean, Trump has rubbed a lot of our allies the wrong way on a number of other topics with his policies and rhetoric. So getting them to collaborate, it's to be seen, but, so I don't know. It's a good place to be. We're in a good long-term thematic. There are tools that at this moment, right, I think it's good to see there's a lot of tools in place. There's still a lot more to do, a lot of capital that needs to be deployed. But I don't see anything yet that has addressed the key. This is the point of my article, this week, is that J.D. Vance rightly recognized that price volatility is the core disease. None of the policies yet address that market structure disease, right? So a dynamic strategic reserve that would buy, sell, stabilize markets to enable a 10 to 20 year investment horizon, to address the fact that volatility is too volatile over too short a time frame in certain materials. So the Strategic Resiliency Reserve that the Secure Minerals Act is talking about is interesting. There's a lot of details that need to be fleshed out in relation to that. And that's just a bill, right? It's now in committee. There are going to be hearings. Hopefully that gets passed sometime in the next 6 to 9 or 12 months. I'm advocating for lithium to be the first test case because I understand lithium, I know lithium, but I also think it has all the ingredients in terms of fungibility and in terms of storability, in terms of market size, to be first. And you've seen lots of investments proposed and then stopped. But I think that needs to be paired with a more battery-centric understanding, promotion of the battery supply chain. So alongside lithium being prioritized, for a reserve, a dynamic reserve, you do need the administration to say, okay, we're sorting out mine to magnet supply chain. We need to sort out mine to battery supply chain. And to do that, lithium is a good first among equals, but we also need to figure out graphite. We need to figure out PCAM, CAM, are we doing enough nickel sulfate, manganese, phosphate?
Yeah. And as an expert, Howard, have you been asked to collaborate or share your research with the current administration?
Well, yes. I mean, I have the white paper engendered a lot of inbound from members of the executive branch, and legislative branch, and some other Washington policy people and journalists to inquire, understand. But as I mentioned, a lot's going on, right? David Copley, Jared Agin, there's the White House National Energy Dominance Council. They have a lot on their plate, right? They have 60 critical minerals, right? The Exim Bank, the head of that Exim Bank, said last week that Project Vault was underway for the past 6 months, and he's shocked that it didn't leak out, right? There's talks about price floors. There's rare earths. So, they're throwing a lot, and it's really only been since October when China weaponized the second time. So it's only 4 months. But we're starting the year, from the Future Minerals Forum in Saudi Arabia to Davos to last week, and I think at PDAC, you're going to see, measures, from Canada, more, measures coming out of that. So there's a lot going on. I appreciate your interviewing me as part of, I am very interested to help socialize these ideas about lithium. The mined battery needs to follow the mined magnet. I think I wrote in the paper a quote someone else said that chips are the brain for AI, but batteries are the heart.
Yes. Yeah. And I think that sums it up beautifully. And then just sort of switching gears a little bit, over the last 12 months, energy storage has become the focal narrative for the lithium sector. During Albemarle's conference call yesterday, the CEO said, "We are seeing a diversification of lithium end markets, with stationary storage becoming an increasingly significant demand driver." How impactful is the growth in this segment over the next 5 years? I know we've talked about this a little bit in our interview in December, and it's really sort of foreshadowed and overshadowed even the EV battery market.
So battery energy storage, for viewers of Rockstock channel, we'd encourage you to look at a number of videos we did where both my partners Matt and Rodney have been outlier bullish on this market, and people like Iola Hughes of Benchmark Minerals, as you mentioned earlier, have come on the podcast, and YJ Lee in Singapore. So yes, it is a big driver. It's not only Albemarle. A lot of investment banks at the end of last year, just in the past few months, as lithium prices started rising, they came out with new notes, saying, okay, we're no longer bearish on lithium. We're bullish on lithium. We're bullish on lithium because of battery energy storage. But it's still it's more difficult to forecast battery energy storage compared to electric vehicles, because in electric vehicles, there's a lot of auto analysts, and you're estimating what's going to be the EV take up, per country, per region. What's the size of the batteries that are going to go into those, and then you estimate some sort of lithium demand in connection with that. The buyers of battery energy storage, it's a more diverse market, right? So there are utilities. It's very China dominated. So data, right? The analysts on the sell side they ignored battery energy storage for a long time. Now they can't ignore it, but the range of forecasts are very, very wide, and in general have been underestimated. So I don't know. I don't think Albemarle knows. I think they still forecast, lithium growth could be anywhere between 15 and 40%. That's a very wide range. So they're speaking to a narrative which is out there, and the way you just phrased it, right? Diversification and whatever. They're basically saying, there's a shift from EV demand to energy storage demand, but I don't think they have a super strong modeling as to how strong it's going to be. But it is important for sure. And I think it is being increasingly recognized in the United States. And I think there needs to be more. And this goes back to a lot of what I said earlier. It's military, and it's the age of electricity. Batteries, I think I wrote this in one of my notes. Google is buying hundreds of millions of batteries for a natural gas powered data center, right? XAI in Memphis, Tennessee, also gas powered, needs batteries. So natural gas is not providing alone uninterruptible 24/7, 365 a day power. Okay. So batteries are needed paired not just with solar, not just with wind, not just with EVs, but to win the AI arms race. And coal is not going to be the solution, and nuclear is not going to be the solution, for 5, 10 or more years. So NextEra Energy, the largest utility in the U.S., which has nuclear plants, which has gas plants, which has solar and wind plants, basically saying the fastest and cheapest way to get electrons onto the grid are batteries. So China is deploying an enormous amount of solar. I think they deployed it last year in solar more than, America did ever. So, but it's not just a China story. It increasingly will be an America and European story. So yes, I think it's attractive demand driver, but we don't know.
Yeah. And being that it's sort of an opaque market that's, hard to sort of forecast, if it surprises to the upside in 2026, could we see a structural tightening in lithium and LFP supply faster than investors had expected, particularly if Chinese supply remains disciplined?
It's possible. It's possible that's underway already, right? So the supply chain for lithium is quite long, and it's possible a lot of batteries, energy storage batteries were ordered, last year, and that was a part reason for the rapid rise in lithium price. So from a short-term perspective, I don't know that we've had some discussion in recent weeks on our channel. Matt Fernley, who works with me, follows this more closely, but there were some changes to kind of like VAT rebates, which might have front loaded some of the orders. But these are short term comments. With a medium to long term view, it's interesting. We're very bullish energy storage. But what's interesting, for all the upgrades that the sell side analysts have done in recent times, that they upgraded their price, but then they only forecast out like 2 years, right? They say, okay, we'll have an up and then it'll go kind of flat. So no one has any real good visibility or is willing to stick their neck out in a meaningful way, with a longer term time horizon than a couple of years.
And circling back to your most recent paper, and you were talking about the different baskets of critical metals and sort of started with like, there's 60, which can be really hard to wrap your head around. We might want to have the critical metals or something. But in your paper, you list rare earths, graphite, manganese, cobalt, and phosphate as particular pinch points. I think some people may be surprised to see phosphate on this list, as it's often associated with fertilizer, as you mentioned before. Can you tell us a little bit about phosphate's increasing use in battery raw materials?
Sure. I'd encourage, our viewers to look at some of the videos we've recently done for First Phosphate. We do have a client, just full disclosure, not investment research, but we approached, or First Phosphate approached us, but we were very interested to talk to them because Matt had written a couple of years ago that, phosphoric acid or phosphate for batteries was no one talked about it, right? They talked about cobalt and nickel, but with the increasing use of LFP, don't forget the P, right? Lithium iron phosphate.
Right.
That's not the same phosphate that is in the fertilizer market, right? So the fertilizer market is huge. The phosphate market is huge. When I was putting together these 3 buckets, Matt suggested phosphate is actually a bigger market like copper, right? In terms of size. Okay. That's true. But this subsegment, of it is not that big and is controlled by China. So it is an important pinch point that with the energy storage growth and that energy storage being dominantly lithium iron phosphate batteries, don't forget the P. And, again, a plug for, the one play that we have in that sector is First Phosphate, which is listed in Canada.
Yeah, don't forget the P. I like that. And sort of ending back with Albemarle, the CEO yesterday also noted that the market is heading towards bifurcation. Are you seeing this trend as well? And what do you think of that statement?
I think there's a lot of talk about bifurcation. I think that Western OEMs were always paying a bit more than what you saw in China. I mean, for many years, we were following the Korea or Japan price versus the China price, but those tend to have been contracted prices as opposed to spot prices. And inevitably, those were going to the Teslas of the world, and they were Arcadium or Albemarle numbers. So there's talk about it, and there's talk about it, as part of this, Rubio ministerial, like he wants to kind of coordinate the globe in having different price structures. But, so I don't know. I mean, he says he's seeing it, but at the same time, they're shutting down Kemerton, right? Which was meant to be ex-China supply for ex-China demand. And he said, we're going to process the spodumene elsewhere. Well, where is the elsewhere? They have Chinese facilities, their own, and they also have tollers, and they've used tollers in the past. So I need to dig into that a bit, more. And I don't know the exact reason for that, but I do know that there is all the margin is in spodumene. There's not any margin in conversion at present. And also Albemarle, when it came to the foreign entity of concern rules under Biden, their joint venture in Talazin, because it's partnered with China's Tangxi, was viewed as not FEOC compliant, meaning Albemarle was not getting the benefit from their Greenbushes feed for Western American supply. So that might have influenced their calculus. Like if they're not getting that, right, then their Kemerton hydroxide was not getting that benefit, and therefore the economics just don't make sense. So yeah, there may be a bifurcation of the market, but you look at Albemarle's actions. One, it's Albemarle, but two, I found it interesting that there's all this talk about processing is the choke point. We need ex-China processing. Here you have the biggest lithium company in the world, American company,
right.
And they're reducing their ex-China processing.
Right. Yeah, I think that's very interesting as well. And we'll
but it speaks to, they're a private market actor. They're like, if the government was supporting Albemarle or there was some public-private partnership similar to MP Materials, maybe that would be thought of differently. And maybe it will be down the road, right? I think I see like a sign a bit in this Albemarle shutting down of Kemerton as, Washington should be listening, and understanding the implications of that, right? Like they need to pay attention to lithium and lithium processing and the economics of it that are being thwarted by price volatility. Price volatility broadly, but also the processing that it's not spoken about enough, that the dichotomy, it can't be, there's an oversupply of processing capacity in China. And that's why spodumene prices have gone up a lot. Chemical prices have also gone up, but the margin's still in the spodumene. You need margin in chemical conversion, not just in the upstream.
Right. And I think that circles back to your strategic reserve very nicely.
Exactly. And the white paper was focused that processing is the choke point. The price needs to be high enough to incentivize both processing and mining.
Absolutely. Yeah. Well, thank you so much for speaking with me today, Howard. I really appreciated your insights, and I'm so glad that we have expert analysis like you working behind the scenes to, make sure that the policies that get pushed forward are the best for the industry. So thank you.
Thank you very much for inviting me to have this detailed conversation.
Once again, I'm Georgia Williams, and that was Howard Klein of RK Equity.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.